Stock market is at a critical resistance level here from a technical analysis standpoint after seeing the S&P 500, the NASDAQ 100, and the Russell 2000 all rally 5 out of the last 7 weeks. It's the dog days of summer, and despite the low volume readings, the algorithms, the program buying continues to buy almost every 10-minute pullback that you'll see on the charts. There's yet to be really a pullback that hasn't been bought up. Price levels hit critical resistance levels, and despite breaking out intraday, managed to pull back, head fake the market, and close below these resistance levels. So going forward, as we head into the CPI report, which is bound to be a very, very volatile trading session, how is the market going to react? What are the scenarios here, and what should we be looking for in the days ahead? In this video, we're going to dig into the technical analysis of the S&P 500, this recent market rally, and whether or not we should be starting to look at booking some profits or go full throttle forward, believing that the market's going to respond kindly to the CPI report on Wednesday. But first, make sure you like and subscribe to this video. Also, check out the join button down below where you can get additional videos from me for members only. It's really a good deal. It's really awesome too. You're going to get videos from me, multiple videos each and every day. So check that out down below by clicking the join button. Now, the last CPI report pretty much sparked this past rally that has lasted for a solid 3 weeks. We had that 9.1% reading. The market sold off initially and it bounced off of those lows. It didn't finish higher on the day, but it still did enough to jumpstart an impressive 3-week rally. So if we come in above expectations again, are we going to see another one of those rallies off of the lows? Or are we actually going to sell off this time like we've seen in previous CPI reports? The market is expecting a Fed pivot going into next year. That's mainly the reason why we have rallied as much as we have. Earnings haven't been that great. If you look at Google and you look at Microsoft, for instance, not that great of earnings reports. Nvidia just warned in a preliminary earnings report on Monday. There's a lot of issues from an earnings standpoint, yet the market's holding firm to this belief, despite the fact the Fed has done nothing to suggest that they're going to pivot next year. In fact, a number of members of the Fed have come out and said, we're expecting to raise rates into next year. And after last week's unemployment number, now there's talk about another 75 basis point rate hike in September instead of the 50 that was initially expected. And with the meme stocks rallies that are going on right now, whether it's GameStop or AMC or Bed Bath & Beyond, there's so much slosh in the market. If the Fed's paying attention to it, they got to realize that, hey, we may need to even do an intermeeting rate hike if this inflation number comes in hot yet again. Do we have any guarantees? Do we know for certain that they would? No. But if you get a hot reading, it definitely increases the potential for that. And there has been a little bit of chatter of that being a possibility. Now, let's go ahead and get to the charts here and start analyzing what we're seeing from a technical analysis standpoint. First off, you have SPY. Check this out, guys. Huge resistance level that goes all the way across multiple price points here. And what we saw today was an attempt to break out above this resistance level. But instead of breaking out above it, which it did for just a little bit on Friday, it actually pulled back down and closed below this resistance level. So now you have an absolute rejection of this particular price point. On the other hand, you also have a declining trend line that has yet to be broken. So until this trend line breaks, we can't say anything to the tune of SPY actually putting in a bottom and reversing this trend. The downtrend is still in place. One of the clues for a major reversal in the price action will be as if volume starts to pick up. You can see the last 3 days have been to the downside, yet all 3 days have been well below average. That's not what you want to see if you're a bear. You need to see that pick up. Also, notice this little mini trend line off of the July lows. This should also be a guide in the short term that if it breaks to the downside and it can break below the lows established back on July 29th, that also sets up for a break of consolidation, much like this time period right here. Very, very similar price action over the past week and a half. And it's happening at the same exact price level. Now, let's look at the Qs, because on the Qs, you have a noticeable resistance level that has broken in recent days. And today's pullback puts it back in peril of being broken. You also have the declining trend line off of the January highs. And this was tested, and for a while there today, it actually traded above that trend line, this declining trend line right off of the January highs. It was broken intraday wise, looked like we were going to have a breakout, but before even the lunchtime rolled around, it was starting to give back those gains only to finish lower on the day. So we have a head fake on this declining trend line. Wasn't able to hold the breakout. Now we're seeing a little bit of a price rejection. And the next question becomes, can it hold this resistance level that it managed to break out of last week? Or is that going to fold? And then we're going to look at a much bigger drawdown that takes us back to this rising trend line, this short-term rising trend line off of the June lows. On IWM, again, you have this massive support level that goes all the way back to 2018. That is held impressively well. That is the major support level for IWM going forward. That's nowhere being tested right now. You also have this declining trend line that has broken. Unlike the NASDAQ, IWM was able to break its declining trend line. Russell 2000 tends to, from a historical standpoint, perform better during a recession than the NASDAQ. And then you have this short-term resistance level that it was able to break out of today. And that was also an impressive feat. But I wouldn't say from a candle standpoint, that's the best kind of a candle that you're looking for. It doesn't mean that it's the end of the bull run for the Russell. You also have this rising trend line that remains still intact. It tried to break below it on Friday, but came roaring back. And worth noting as well, you have a bearish wedge that has formed going back to those July lows. And while it looked like it was going to break out of it today, it managed to sell off enough to where it finished back inside of it. So IWM is more bullish than bearish right now, but there's definitely some things you want to keep track of. So between SPY, the NASDAQ, and between those two and the Russell 2000, Russell 2000 definitely looks a lot more bullish at this standpoint. SPY and the Qs are both against some key resistance levels. But the Russell can actually hold its own fairly well relative to the S&P 500 and the NASDAQ when there is a major market sell-off. And oftentimes you'll see people rotate from the tech, which has been very hot of late, back into the small caps. And if that happens, you could have that divergence there where the small caps hold steady while the NASDAQ weakens some. Don't be surprised either on the CPI report on Wednesday. If it comes out and it comes in hot, the market doesn't still try to buy the dip on it. There's a lot of unknowns going into this week. It's very unpredictable what we can do as traders, not to over leverage ourselves, not to put too big of positions on. Trade small. I have about a 10% short position on this market right now. It's not a lot. If I get burnt on it, if I lose on it, it's not going to kill me. And we have to be thinking like that as traders right now, not to overexpose ourselves to some of this crazy market volatility that is likely to visit us later this week. If you enjoyed this video, I'd encourage you to like and subscribe. Make sure to click that join button down below so you can become part of the YouTube membership. And let me know down in the comments below, what are your thoughts pertaining to the CPI report? You think it's going to show that we've peaked? Or do you think that there's going to be a lot more inflation still ahead? Do you think that with the bill being passed, the Inflation Reduction Act, that we're actually going to see a reduction in inflation in the days or weeks ahead? Tell me down below. Thank you guys, and God bless.